Hey, hey,
Hello.
Hey everybody.
how are you? Hey, I've been sitting on another Zoom call, waiting for everybody to show up, and I'm like, did I do something wrong? And then I
Mine
realized
said
I
mine
texted
said you were in
Mark, and I
another
was like, "Are
meeting.
you getting on?" And he goes, "Yeah, I'm waiting." And I went and I looked, and I was like, "Oh, well, that's for my 1 o'clock. That's not gonna work." So sorry about the delay.
No worries.
Yeah, I was like, I'm waiting. But anyway, then I saw in there you were in another meeting. I'm like, okay, maybe I got the number wrong. So I went back out,
No,
came back in.
I had just created the 1 o'clock
Okay.
call,
We
and
doing
I
that?
went and just clicked start, not
Oh,
thinking. So
that's gonna
anyhow.
be that's gonna be 115, right?
Yeah, yeah.
Okay.
It's gonna be that. Yeah, that'd be great. So how are you
Well,
all?
how's everyone doing?
Good week.
Yeah, I saw you did some good stuff, Paul.
Yeah, I'm learning. I
Yeah,
did
we all
something
are.
I did something funky this morning. I Wynn was down, right? You guys probably heard about that. Wynn Resorts.
Yeah.
And it dropped to like 82. And what I did is I purchased my girlfriend had Wynn and I sold it, a few months back and she made good money. And she said, that's a great company. I don't know why. And we learned it was because there was a strike and so a few other issues. So we went back in and we're in the green now. And I set limits, and I could get out now with a gain. But I'm noticing some of these good companies that have bad earnings, they get killed in the morning. That first half hour, they're getting crushed, and usually they bounce right back up. Like I noticed the same thing with ARM, with a few other good companies that they really get killed with the uh, after hours trading. And you could do a quickie if you know the company to some degree. So that's an interesting way too.
Can you give me permission? I'll put it up for us.
Oh,
Yeah.
sure. Oh, well, that would be.
We'll take a look.
No, hold on. Got it.
Yep.
All right.
You're going to put in Win,
Yep.
Wynn.
You guys see it?
Yep.
Yep.
Man, you are kind of a cowboy.
I got it at 84 and I'm like, maybe I should get out now.
Yeah, you're at 85, 60. That's, it's riding that lower Bollinger Band that went down below. And a lot of times they'll ride above it, you know. But if it does go down, you never know what's going to happen. You got a MACD that's dying, or you got a stochastic that's dying, RSI is dying. So you have a lot more risk tolerance than I do, Paul.
Well, I think what happens is we've sat on that stock for a few years.
You
We've
know
had
it.
Win. Yeah, you get
Yeah.
to know a stock and you're like, okay, what
Yep.
happened here? There's a strike, there's this going on. You get to know this, just like you, Berkshire, you kind of know that stock.
Yep, that's true.
So
And
that's why you're, yeah.
that's why you find favorites, and you kind of go off your chart in your trading guidelines sometimes because just what you said.
Yeah. So if you know it, like if you put ARM up,
Arm.
ARM, which they make. I know Nvidia tried to buy them out, and maybe another company tried to buy ARM out because it had some intellectual property, and their earnings were bad. What? Oh, I'm trying to remember what drove it down. They did get some orders, but I know plenty of uh, companies use their product, like high, edgy type company. So I had an opportunity to buy at 50. I was watching it at 50. I said, this company's a good company. I can't believe it's this low. And I just didn't have the heart. I was like, I can't do it. Doesn't meet any. Here again, I knew the company to some degree. And I said, I want to buy it, but I didn't.
Yeah.
And it's still, it's bad with all the statistics, but what we just discussed, you know the company.
Yep.
So I don't know.
Yeah, I'm a chicken. I try to stick with my trading guidelines. Every time I stray, it always comes back to bite me.
Yeah. I
So
know.
again,
Yeah.
I'm very conservative in how I do it. So, but it's not about me and how I do it. It's how you guys learn it and make it your own plan. You know, it's not my plan, it's your plan, what you follow and what's successful for you.
Um, just a quickie. I sent you an SBB. Did you get a look at any of those ones I
No,
sent?
I'm pretty busy on Friday mornings. I prepare for this meeting. SBB.
SBB. And then, I know you got notes. So I was looking at that. I was like, oh, that's interesting.
Yeah, I'd kind of, for me, you know, I would wait for a little more confirmation on this MACD. But you do have a crossover here, which is usually, you know, an indicator you're going to get a crossover. And then, you know, a little bit of a slide on the RSI. But yeah, you got a nice uptrend, you know, several days in a row. You don't have much on the upside. You've got some sells up at 1973. You're currently at 1945. So, I mean, I always try to look at the upside versus the downside, you know.
Hmm.
And again, I don't mess around much on Fridays either because I don't want to be stuck on the weekend. And like we've talked before, you know, and I know Trent and I have talked about it several times. You know, the retail guys get in the morning, and the institution guys come in the afternoon and clean up. And a lot of times on Fridays they clean up really well. And depending on if options are expiring too, you know, that can mess you up. Um, and then so you know,
Market
I'm about
conditions.
as risk averse as you can be. And so that's a good thing for you guys because you know that there's always upside or downside, and you have the ability to move forward in any way you want. So,
Thanks.
any comment on that? I see you smiling, Trent.
No, I totally agree, and I think it just sort of lines up with stuff I've been commenting on about the treasury market here this week, about how yesterday's 30-day auction was a disaster. And it
We'll
could have
talk.
been
We'll talk about that in a minute. I got it on the notes, so
oh,
I
okay.
was hoping you would kind of chime in on what you came up with because that was pretty interesting.
Oh, with the
Treasuries,
treasuries.
yeah, the tail and all that.
Oh yeah,
So,
um the description of how all that works.
yeah,
Yeah, I thought it was
it's it.
interesting just how you can like I saw this interview with Rick Santelli and um Jem Carson, who is an options guy. It was on CNBC the other yesterday, and they were talking, why is this such a disaster? And it's because of the spread. If the yield goes up, if the auction is at, say, hypothetically at 4%, and it closes at 4.05, that's considered a bad auction because the bond price was actually lower than what they issued those at. And
Yep.
I found it interesting that the 30-year, in line with a lot of what we've talked about, is how there's gravitating from the long maturity to the short maturity, which then got me to thinking about, well, what's the short maturity ETF, and which is SHY. And if you go back 20 years on it and you match it up with a couple other famous investors who are very long the 2 years and below in maturity, it's interesting. It could be a long, sort of intermediate or long term trade, but going into the weekend, I'm looking at the bond market, asking, are we about to see the longer term maturities on U.S. Treasuries skyrocket next week, and is something going to happen over the weekend? Um,
It's and see that's the unknown market condition, you know,
yeah,
that
oh yeah,
you kind of gamble with, you know, and that's why I like my weekends. I like Friday nights, go out and have a beer, watch a football game, and not having to worry about,
right,
you know, what's going to happen. So I try to get out, but that's just me. There's some
yeah,
people, if you have a good trade, stay in, you know.
yeah. Well, I think
And
it's
part of it is the money flow because it's interesting. Every week, Bank of America comes out with their money flow, and I was looking into it, and U.S. investors poured a massive sum into the bond funds in the last 7 days, and they were hoping for that turnaround in the Treasury bond price, what you were talking about, Trent. You
yeah,
know, following the Federal Reserve's decision to keep interest rate unchanged. It was interesting. The U.S. money market uh, segment received 6.47 billion which was a lower, it was about a tenth of the 56.1 billion net purchases the week prior to that, but it's still the highest level. 6.47 billion went into money market. The US high yield bonds funds received 6.29 billion. That's the biggest weekly inflow since middle of April 2022. So that's your high yield corporates,
Yeah,
basically. Junk, you know.
right.
US
That
bond funds, just the bond funds itself for US, back amassed 3.61 billion of inflows. That was the biggest amount since July 5th. And the US equity funds did bring in about 1.9 billion. That's the first weekly inflow in 8 weeks. And it's probably because, we're seeing this big bump up in the tech sector this week, because of the bonds and, the treasuries prices coming down.
yeah,
But the investor was interesting because the report went on to say investors pulled a net 1.9 billion out of U.S. short and intermediate government and treasury funds. So just what you said, Trent, they're not interested in the longer intermediate terms, which is why these treasury auctions were so poor.
yeah, yeah. I think I like the bond market because of a teacher. I took a class to prep for the Series 7 back in '99, and it was a young guy, and he actually worked for Bear Stearns, or he was retired from Bear Stearns, and he was in his early 40s, and he talked about bonds like they were the king of the hill, and he exposed to me like this is why these are important and why people should pay attention to them. And it was something I was digging into some charts on the US 10-year treasury and the German 10-year Bund, and going back to June of 2018, and where all of a sudden you saw a slide in the yield, meaning people are buying these things up to their through June of 2018 through 2019, it accelerated into March of 2019. And if you start to think about historically what happened between that time and March of 2022 or 2020, I've always believed that somebody knew that something that was going to happen in a big way, which then drove the German 10-year Bund into a negative 6.4% yield, and brought the 10-year down to I think a 0.52 or 0.55% yield, and then all of a sudden COVID happened. And it's like, is the bond market telling us something right now? And that's how I've always looked at the bond market in a sense. So anyhow.
Bond market is 6 times bigger than the equity market.
Right.
So what people have been trying to do, you've heard about people shorting the bond market and then getting out. This is TLT, and this is the Treasury bond ETF for 20 to 30 years. You can see we've had this long slide down as yields, you can see are now turning around. So people are coming back in to the Treasury, the long terms here. You see this week or today, we're down, but in hopes that if the Treasury yields come down, that the price will go up. And if you go back, I believe like in 2008, you can follow some people that did made a lot of money in the TLTs when the markets went down and the yields got hit and the price of the bond went up. So that's what they're talking about. But TLT is something I've been watching. It's now crossed, it's right at the 50. It's above the 9. And I just want to watch it and see what happens.
Yeah, I think it's going lower.
Yeah, I mean, what they said, just this is verbatim out of a report I got. It says the Treasury auctions 30-year bonds on Thursday went about as bad as it could, indicating investor reluctance to own long-dated securities. The $40 billion auction of 10-year notes on Wednesday received a moderate level of demand, taking into account it's a bigger size. So the Treasury's out there offering more and more as far as the amount of bonds to pay for our deficits and our debts, which are expanding. The Treasury only sold 24 billion of the 30-year bonds, and that was the weakest in almost 2 years. And the number of bidders was the smallest since 2021. So that's why they were talking about this is a horrible, show up there. You have brokers that come and buy these and then sell them off, but there was just no one there. The Chinese are not buying our bonds anymore. The Japanese are not buying our bonds anymore. They're net sellers of our bonds right now. So that's got to be made up somewhere. And so where it's going to be made up is on the short end. And if you go, every Tuesdays and Thursdays, you can see when the bond auctions come out and see, the different prices. And the short end is still bringing you in about 5.4%. So, anything else on the bonds? I mean, I know it's boring and no one ever talks about the bonds, but it's kind of a big deal, like Trent
I
said.
I kind of found it interesting this week when the Chinese ended up, they had their system was hacked.
Yeah,
And so they were unable, actually unable to fill orders that they had
right.
for bonds.
Yeah, it was ransom hacked, I think.
Yeah.
It was, yeah. And
So I don't
I
know
was,
how
I was
much,
watching I was watching
I
Rick
just don't know how
Santelli, and
much
he
impact that had. But
he didn't give as much credence to that as he did. There's just no interest in long-term
yeah
U.S. debt right now. The
I
reason the reason that the bond market is so important, like Trent inferred, is we're a debt-based society. We create money out of debt in our society, and if we don't have money moving and we don't have loans moving, there's no money being created. So the velocity of money goes down, and that's why we're fighting right now from a macro point of view, in my opinion.
yeah I have a friend who works for Transamerica. He's a mutual fund wholesaler, and he and I were talking, and he texted me a thing on their short-term um, bond fund, and they did a simulation test of if of about 100 points, if 100-point move in particular bonds was both up or down, what it would result in their fund. I found this interesting because nobody really relates these kind of returns off of bonds, but he was saying that if they get a 100-point shock, um, they'll see on the downside a negative 1.38% return for the year. If they get it from a positive side, it would be a 13.06% return out of their fund. And I found that so interesting because you don't buy a bond fund thinking you're going to make double-digit returns in a year, but in the environment we're in, that's becoming more probable. And I think that's where, I'm looking at like, where SHY is, and I'm like, yeah, it's high. It's right around 81 right now, and its high, I think, ever is 87 or so. And I'm like, if things go the way I think they could go, this could be $100 ETF in short-term bonds, and that's not something people think about. So,
Nope.
yeah,
No, I mean, when I scan every weekend, I scan the bonds also, and that's just a part of my normal look of stocks that we end up with on our list.
uh-huh.
Um, and TLT has been on the watch list for a long time, just watching, to see what's going to happen with the TLT.
Yeah,
So, but you're seeing a lot of money flow. That's why you watch money flow, because money flows to where the value is. And right
yeah,
now, the value, it looks like money markets and bonds,
yeah, true.
Uh, we get a lot of reports out. I'll move on real quick. And it's interesting because there's something called the headline number, and that's the number of, new jobs created or the GDP or this and that. And that's all they talk about. And they never get into the weeds of what those reports are. So I always try to look at them and bring a little color to some of these reports. And just, let's look at job revisions. And I got a report the other day. It said the administration for job revisions has revised down previously reported job data nearly every month this year, resulting in a huge disparity from the originally advertised numbers, according to the Bureau of Labor Statistics. The number of jobs added in August was revised down from 227,000 to 165,000. And September was revised down from 336,000 to 297,000, resulting in 101,000 fewer jobs than previously reported, according to the Bureau of Labor Statistics. The U.S. economy added 150,000 jobs in October, subject to revisions in future reports, lower than the 170,000 jobs that they expected. Since January, 8 of 9 months have been revised down from the initial report, resulting in the original announcements being higher than the later revisions by a total of 337,000 jobs for the year, an average of 37,000 jobs per month, according to data from the Bureau of Labor Statistics. July was the only month this year not revised down following the initial report, actually being revised up by 49,000. So I'm finding this not only in jobs reports, but just like in almost all the reports that we're seeing coming out of government agencies. So it's interesting to me that we're seeing all these revisions, but they're not the headline numbers. So they come out the next month, they said the headline number is this, and oh, by the way, we kind of revised down these, in a little paragraph underneath on page 7. And so just be careful, of reports. If you're watching reports to make decisions, be careful of earnings reports, and listen to the conference calls, and read the 10Ks and the 10Qs, and you'll find a lot of information in there that get beyond the headline report. Even on earnings report, the earnings report were stellar, blah blah blah, and then they talk about GAAP versus non-GAAP, and learn about that and go into those reports and see those, because that's why you see a lot of earnings. At first everyone reads the headline, and then stock pops up, and then they have the conference call, or someone gets the 10K and looks at it, says, oh, well, this isn't as good as I thought. Then it comes back down. So just something I try to look at and warn people about. Any comments to anyone?
No, I saw that same thing, and I was like, why aren't they talking about this? I mean, it's not getting better, but it doesn't sell ad space.
That's true.
It did back in the day. It didn't sell newspapers. Now, so you don't talk about it.
If you watch like CNBC, you have the people that always seem to be, I call the cheerleaders, like Rick Santori or Santelli. He's on the middle report. He always comes in to do the Santelli. It's not Rick, it's the other guy, and he's always he can make the Titanic disaster look like it was the best thing that ever happened in the world, in my opinion. And there's a couple of them on there, but that's their job, is to pop the market up and keep it going. And it's more entertainment than it is actually business reporting, in my opinion.
Yeah. What was it? Yeah.
The other thing that really, moved the market around, and the markets are moving sideways, and I'll show you this in a second, was the Federal Reserve. They had their meeting. Everything's great. Last week the market takes off, and then everyone comes out and speaks this week. So I got a little montage of what they said. So Minneapolis Fed President Neil Kashkari stated on Friday that while a hiring slowdown is seen as positive news for the central bank, he doesn't want to overreact to the data from just 1 month. Richmond Fed President Thomas Barkin had similar thoughts on the recent jobs data, indicating that his decision on whether to raise rates further will be more influenced by inflation reports, which, by the way, we have CPI and PPI next week. The Federal Reserve has made significant inroads in its battle to bring inflation down to its 2% target, and attention will turn to how long to keep interest rates at their current level if that progress continues, and that was Austin Goolsbee out of Chicago. Christopher Waller described the third quarter U.S. economic growth as a blowout performance, and emphasized that the central bank was closely monitoring these figures when thinking about policies going forward. Fed Governor Michelle Bowman says she continues to think the central bank will need to increase interest rates higher to curb inflation, but she also noted that a surge in Treasury yields since September has resulted in more restrictive financial conditions. Of course, now the Treasury yields are going down, so will that help or hurt? Who knows?
Yeah.
Philadelphia Fed President Patrick Harker expressed the view that maintaining interest rates at their current restrictive level was the right course of action. With monetary policy, there's always lags. Holding the rate steady will give those lags time to catch up. And then, the king of them all, Jay Powell, came out yesterday, and he warned against being too misled by good data on prices, saying the mission to return inflation to 2% target has a long way to go. So then we saw what happened to the market yesterday. So it's interesting. Again, I'm so tired of waiting on bated breath on what these guys say. And that's why, you swing trade, and I sit in treasuries while they're figuring all this out. and we swing trade on others, and I have a few long-term positions, and I'll just wait it out and let the market come back to me. Anyone else have a comment on the Fed and what they're talking about? Anyone have a feeling on it? I think it just messes the market up.
Oh, absolutely. I think it's like a yo-yo, it's up, it's down, it's up, it's down. And I think if you just truly look at the foundation of all this, it's not strong, and it's just getting worse. I mean, your revisions of job numbers. I mean, come on.
They have no. It's like they're out there and they got a bunch of fortune cookies in a hat. And they just grab a hold of one and just say, okay, what are we going to say today, kind of thing.
Right.
Yep.
I think that's where like what you're teaching, Mark, is the swing trading side of this is you can apply it to any time frame, and it makes you a better investor. So,
But what it does to me is it puts you into a process that you decide what the process is. Now,
yeah,
I have my trading guidelines that I follow, and Paul has his, and everyone has their own. And as long as you're happy, but if you stick with your process and the process works, it's so much easier for me because I don't have to think anymore. I don't have to know if it hits my resistance line, I'm out. If it goes down below support and I don't want to lose anymore, I'm out. I look at where I get in, I look at where I get out. If it goes higher, like Nvidia did on me this week, I don't care. I'll
yeah,
take $27 a share in profits, even if it's up 30 now.
yeah,
I think basically what you're saying, Mark, is that it affects the market, but it doesn't have to affect you,
Right.
bro. Realistically, because you determine your own future rather than just following what the market does because of poor guidance from the feds or anybody else.
Yeah, I don't think they have a clue of what they're doing myself, but that's just my opinion.
Yeah.
I mean, if you really step back and look at all of it, they're really in a pickle. Our government's in a pickle. And so
it's a catch-22.
Yeah.
Because you got the Fed on one side raising rates. On the other side, we've got the government who has to pay $1 trillion in interest now a year because the rates are going up, trying to find more revenue through the bonds.
The bonds.
Yep.
Yeah.
So it's like, oh well, we got to keep the interest rates up so that we sell the bonds because that's what's supporting the economy or the deficit is through the bond sales. And then well, we gotta support the equity. We gotta make sure that the stock market doesn't fall apart.
What I need?
Yeah.
Yeah, it is catch-22, and I'm fine with it. I'm not from a macro U.S. government being a citizen fine with what they're doing, but I know now that in order, when the stock market goes up, money will flow, like we're starting to see a little bit, back into equities, and they're competing with equities for returns. So Janet's going to have to raise the yields on these to get people interested in buying them. And they're only going to buy them on the short term. That's all I do, because if the market comes swinging back, I want to get my money out and get back into it. So it's a catch-22 for them in that respect.
Yeah.
A few more things, just other notes I saw. I'll try to get this done in a half hour so we can look at charts. Wall Street Journal reported that amid a decline in the sales of electric vehicle, manufacturers and sellers are resorting to price cuts and other incentives to help reduce the buildup of unsold cars. Industry experts say the price cuts are a reflection of people's unwillingness to pay premiums for the electric vehicles. Plus, like Elon Musk said, the higher interest rates, people can't afford the payments on these cars either. So it's interesting. When we try to push, yeah, I mean, when governments get in and try to push products that are not ready for market yet and push companies into making it, I think it's really hurting GM and Ford right now that they're pushed into these electric car markets. But that's my opinion.
But even to push us into it, like I've been fighting it just on the basis that they're trying to twist our arms into buying electric cars. And I always keep saying this, can't drive electric car from from New Jersey to Florida or vice versa.
Mhm.
Because you have to stop 6 times when in my, X5, I stopped once, twice, actually twice to fill up.
Yep.
And that's only for 15 minutes, and that's basically fill the car, use the facilities, and
Grab a
hop back
bite.
in the car, right? And hit the road. But I will give you some feedback because I just negotiated a car for my son, and from BMW, and they've been pushing the electric car big time in their fleet. And they are not selling the cars. He tells me these things. I'm sorry, those are trades transacting. Um, those the cars are sitting. And I said, well, what are they gonna do with them? He goes, well, they've been cutting the prices, and obviously they're gonna have to further cut the price. But they're not selling. People are
No.
not buying them. I can see
What the
Tesla selling them
shit?
on the basis that he's in the market and he's got his prices really, his costs refined. But he's saying if you listen to his call, I listened to it, he's having trouble. He says the customer's having trouble paying for the car. And I know you can get top of the line right now for $750 a month, and that's $125,000 car.
And you think about that payment. I mean, I think most car payments are over $500.
Oh
And
yeah.
for the average, household, that's a that's a
That's a
big
lot of
chunk.
money.
That's $6,000
Yeah.
plus the maintenance, plus the
On a
car, the
fixed
gas and all that.
on a fixed income,
Right.
right? That's a tough nut. The insurance is that number too, right?
Yeah. My insurance went up recently. It's uncomfortable. I
Yeah.
mean,
Yeah, everybody's.
Mine
so
too. Mine too.
Yep.
so I think it's one of those. It's a combination of many things that makes that a dead end, specifically in the next probably 5 years, a dead end sector, in my opinion. It's
Yeah, I
just we
think
just
that
don't have the capability.
the longer you can wait, if you need a car, the longer you can wait. If you don't have a car coming off lease right away, that you can wait a little while, you're gonna buy a car. The prices are coming down, and it's a buyer's market now. So, it's just a matter of time before they have to start ramping up because the cars are building up in the lots. Just take a look as you pass the dealers.
Yep. And I watch the vintage car market pretty closely, and I'm seeing a lot more deals out there as people are getting rid of their toys. Either
Yeah,
they
the
can't afford
toys.
they can't afford them anymore, or
Yep.
it's just inflation. So if
Well,
you have cash and on the side you're not in debt, you're going to be in a pretty good shape, in my opinion. What's going to happen here coming up in the future?
We I met with some friends of mine. They're retired, and they started managing. They fired their financial advisor a year ago, and they started managing their own money. She manages the equity side. She's short in stocks, that kind of thing, and he managed the bond side. But every 6 months, they've gotten this habit of going out to open houses in our area. And I met with them, had coffee with them this week, and I was like, "Well, what'd you find?" She goes, "The builders are just desperate for an offer, and all of them are saying we have to sell these homes before year's end. We have to have them off our books."
Yep.
And these are they're in the $1.5 to $5 million range homes in our area. And I was like, so in other words, they get into the first year, nobody buys these houses. They have to refinance this debt, and they're refinancing at 2 to 4 times what they borrowed at. And all of
And
a
if they
sudden,
can,
if they can. Yeah.
because
And
the banks have tightened up on the money.
Definitely.
yeah, my
Absolutely. Yep.
my thought, I said to them, I said, this is going to cause the the failure of small and mid-sized banks, because now these homes start showing up at their front door and the keys are handed over, and they've got negative assets on their books in treasuries and mortgage-backed securities. these banks can't withstand it. And this is where I think in the next 36 months, we're going to see a consolidation of the small to mid-sized banking industry. And I think this is, I'm in a unique area, but I gotta believe in other parts of the country, people are experiencing the same thing. I can't
I
afford
don't
a
think,
house. I can't afford a car, you know?
Well, it's
I
kind of
think they're
interesting
being
because
generous.
I just, one of my points here is a new survey by Bankrate came out this week, and it showed that 50% of Americans say their financial situation has gotten worse since 2020. By comparison, just 21% think their financial situation has improved, and 26% says it's unchanged. So it's interesting to see, everybody's, the economy's fine, and the consumer's resilient, and we're spending. And then on top of that, you keep seeing surveys like this, where they're talking to people and saying, I'm worse off. And, I'm lucky enough to have saved and done things right, through my life. But, I was telling Trent, I don't go grocery shopping. Jan does all that, but I went with her to Walmart Sunday, and I was shocked at how many of the shelves are empty, and how much we got. Like 3 bags of groceries, 100 and some bucks, and I'm like, really? These little bags,
I think you
and
got
it's
one bag extra there.
yeah. Well, we live in the Midwest, so maybe we get a little break on it. I don't know.
2 bags for me. You buy organic, 2 bags for me. I mean, sometimes even a bag is $150.
Well, Robert,
Yeah.
you
I
must
mean,
see. I only put one. I only put one thing in a bag.
yeah, you obviously didn't put any meat in that bag, Mark.
Oh,
That being here in the Midwest, I have my own supplier of that, so I can buy a half
Yeah,
beef every year.
yeah.
So,
Well,
and
I
it's
do
in
the
the
same
it's
thing,
in the freezer.
It's nuts.
but beef
Yep.
Anything you buy is $6, $7.
Yeah.
$6, $7. That same thing was $2 to $3. You know,
Well, I saw up in your old
Here or
stomping
so.
ground there, Robert, up in Delaware or whatever. They had $18 Big Macs or whatever.
Oh my God.
So they must have great meat up there.
Yeah, that's
So
crazy.
just moving forward, it's not just us that's having this. Look at China and the problem they're having with their, not only their property, missing big bond payments, and they're also, customs data showed that Chinese exports in October dropped more than anticipated, while the country's trade surplus narrowed by its worst level in 17 months, showing that they're not making as much product and not pushing it out because we're probably not buying as much from them. And then, just to kind of put it on top of it, we're coming up on Christmas season. And that company, Maersk, is the second largest shipping company in the world, is going to lay off 10,000 people right before Christmas because they don't have the ships. The ships aren't full, and they say that it's intensifying job cuts in light of the worsening market conditions in ocean shipping. And it's not that they don't have cash; they have a lot of cash on the balance sheet. They just don't want to get caught up in it, so they're going to lay off 10,000 people.
Wow.
Yeah. So I mean, look at the big picture of what's happening, and then compare it to what you're hearing from the Treasury Secretary or the Fed chief or the talking heads or congressmen or whoever, and use your brain, make up your own mind what's going on. I see things different. I look at all this stuff all day, and my view on things is a lot different than what I see on TV, and my view is based on what I see in the numbers and what I see when I'm out among my life.
I agree
So,
with that. I see that as I hit the restaurants. I've said this before. Lately, I can get into, the good restaurants without a reservation anymore. I just show up. I can get a car, I can get a table. Before, you would have to wait an hour and a half if you just showed up with no or sometimes you wouldn't even get in until like it's 8:30, 9 o'clock, the last rounds of serving tables. But yeah, just seeing what's happening out there, it's very clear. Also, just on the note about the bond payments not being made, the house payments not being made, the car payments not being made, and the repossession of this stuff is all comes into effect on those small banks that they can't survive that because they're not gonna have the cash to be able to lend. And when you go looking to borrow money, the answer is gonna, it doesn't matter on your credit rating. It's gonna be some bullshit story of why they can't give you the money after you submitted everything.
Yep.
Yeah, I agree. I think it's one of those things. I think you'll see the banking system will contract from 4,200 or so banks in the United States to half that.
Yeah.
And
And yep, you're right.
Yep. And the bigger banks are gonna get bigger.
yep.
That's the sad part of all of it, because the big banks are just gonna come in and sweep up those the small banks with their customers.
Hmm.
And at the end of the day, those banks, the JP Morgan Chases, are gonna become these
They're
huge, will not fail type of banks.
Yeah.
Yep. Let's look at what we've seen in the markets today or this week. And here's the S&P 500. This is today. I don't know why I keep blinking. This is yesterday, Wednesday, Tuesday. Here's Monday. So basically, this was last week. You see all these gaps that we have. And then it got up to the intermediate resistance level and just kind of leveled off. And we saw this before. When we go back into October, it did the same thing right before we had the October dump. So are we going to do the same thing or not? I don't know. You saw the 9 came up here, touched right on the bottom. 9's coming right up here too. It's looking eerily the same, and I'm seeing a little bit of a flattening of the MACD crossover. You know, the stochastic, we are high, so you could see that a lot. The RSI is still there, but you know, we're having trouble with this resistant level at this point with the SPY. We go over to the Dow Jones. It'll come up for me. We're seeing the same pattern that we just saw. It came up. Here's the intermediate resistance level. Did the same thing. And you can see we're just sideways since last week. We came up. You got gaps here that'll need to be filled at some point, and we're just humming along sideways, waiting for something to happen. Is it going to go up or is it going to go down? Well, next week, you know, we have CPI and PPI, and I suppose we're waiting for that. But you know, right now we're kind of flat, and then we go over to the Qs. These are all tradable that follow the indexes, as you guys probably know. So
What do you think about the CPI coming out next week? What's your thoughts on it?
You know, I don't really care.
Well, it doesn't really matter in swing, but you have to have an opinion of where
I think
it's
I
going
think
to stand, because
I think
it's actually important where it's going. I mean, the ISM keeps going down. The ISM keeps going down. There's no manufacturing happening. It's compressing.
Yep.
So, you know, we have a problem, and that has to come out. If that means there's no demand, right?
You want my true opinion? You know, I think
I want it.
The CPI and the PPI are crap, because let's take out food and energy, the two things we actually need, and say, oh, look, inflation's down. And the other thing is, oh, inflation's down. Well, it's not. We're still going up. We're just not going up as much. The carton of milk has not come down to where it was, you know, when all this crap started. Gasoline is not down to where it was when all this started.
Oh my God.
Yeah. I mean, so
I drove down to Boca Raton. I paid $5 a gallon down there.
Oh,
yep.
Crazy. I mean, $5, $4.99 a gallon.
You guys should live in Canada. We're over $6. We're $1.60, $1.69 a liter, which is
wow.
Multiply that times 3.8 is per gallon. So
wow.
That's that big sucking
don't
sound.
Don't start with the gas.
You keep charging $5, $6, $7 a gallon. The big sucking sound comes out of fixed incomes.
Just remember, guys, that inflation is coming down. We're getting, things are better.
Yeah, where?
Yeah.
Well, again, so you asked me
on your farm, maybe on your farm, but not here, my friend.
No, you asked me about CPI and PPI. I told you what I think.
I understand what you're saying.
I think the report is full of crap. When you can pull out whatever you want to make your report look better, you know, and people sit there and they'll discuss it, on CNBC, and then, oh, this is great news, the CPI and the
Oh.
PPI. And I'm like, are you kidding me? These people don't live in the same world we live in, guys. We live in the real world.
Well, the
And
real
we see what
report is
prices are.
the real report is in the revisions, not the
Yeah.
report
Again,
coming
yeah.
out. That tells you
Yep.
the truth.
281,
64.
Here's the Qs, which is NASDAQ. NASDAQ, and the tech stocks have been on a tear, but you can see basically, it's gone up a little, but we're still kind of in a sideways pattern here. Looks about the same. Basically what we saw before. I'm going to zip over to, let me get out of this one. I try to get all these in so we can take a look at them at least.
Don't forget about Bitcoin now.
Bitcoin is okay. We'll talk about that because that's interesting too. I'm going to go over to the watch list and let me put this on screen for you. I try not to do too many because I don't like try to over manage on the watch list. So this week we had NVIDIA and then we had CMC Comcast, which was kind of a disaster. Okay. Move it over just a little.
I think the Comcasts of the worlds and these guys, anything to do with cable, they're in trouble. YouTube's going to put them out of business.
I agree, but when you're swing trading, I look at the charts, and at the beginning of the week, it looked kind of promising, which is why I put it on here. But it's also why we got out. I usually don't like to go to 3%, but it was $100.34, and I knew I was going to make it up in NVIDIA and in the Berkshire. So NVIDIA yesterday it hit the upper Bollinger Band, and that's where it hit my limit, and it gapped above the intermediate resistance a little bit. And so I said 27.55 is good enough for me, or 6%. Okay. And I got out. I'm still in Berkshire, but I got an order in at Berkshire, and I'll show you where that's at. So the only loser this week was Comcast, but we made it up in other areas. So you're going to have losers. We have losers. But just depends, nothing's certain. Let's go over to Horizon list. The Horizon list, they didn't have too many on there, but we're out. When the yellow pops up, that's when I would have gotten out. And you can see these I just run between basically support and resistance. You can see when you get out, I come over, I put the price we get out, and these all hit. Yesterday it all hit. Even got Tesla before we lost a lot of money. Made $64, just using support and resistance to get out. So for this week, up $1,300, just going between the lines on this particular Horizons list. Let me see if I can get the 200. The 200's been doing. The 200
good on Carvana and Marvell.
Yeah. Did you get in on some of these?
I did Carvana and Marvell.
Okay. So here's these are under the 200s list. You can see the only one that's left, and I haven't looked at yet, is Mr. Car Wash. But we're only up 13 cents on that, but that's a smaller stock. But again, we had some of these from last week that just remained on. And then again, between support and resistance, you can see where we got out, and a couple losers here, which I added this week, which is okay because when you look at the total, we did okay. I don't like to lose, but when I do, I want to make sure we limit it. We let the runners run as long as they want, and we get out of the losers really quick. So Mr. Car Wash is the only one that's back. I try to give just a summary of what happens every week, so we can see, on our list, if the market's gone up or gone down. Here's where it closed a week ago. Here's where it closed last Friday, and I'll update that too. So, okay. So Carvana is not on this one, but Paul, you said you were in Carvana.
I got Carvana and I did good on Marvell, but I lost on Johnson.
Oh, yep.
But that's okay.
Yeah. I lost on Johnson here too, down $88. So let's look at a few things, and then I'll let you guys tell me what you want to look at. So we're having a race here. Let me put this up on screen. We're having a race between Apple and Microsoft, I think, on who's going to be the biggest company. Apple's still ahead. And here's Apple's really look at this run
Look
on
at
Apple,
this.
even
Wow.
after earnings. It's all the way up, and this line here represents where sell orders are. See, and they also had a distribution today. So again, it's come up, hit where the sells are, and that's where it's kind of stopped. But wow, what a run on these guys. And you know, the MACD is still showing some gas on it. So interesting chart, and then we'll go look at Microsoft.
But the Bollinger Bands are widening, right? That's a clue
Yeah.
too. Yeah.
Yeah, well, that just shows you have a lot of variation and volatility going either way, up or down. And you can see here when there was no volatility, you know, it's just staying the same. The Bollinger Bands were pretty close here and here. But Microsoft,
Today, Microsoft really pumped today, right?
yeah, Microsoft got above its intermediate resistance level it was at for 2 days, and now it's coming up to where the sell orders are. We'll see. This isn't, in my experience, this intermediate resistance level on this program is a pretty good indicator of where things stop. And so they'll pop over a couple days maybe, but I use this. This is my most reliable get the heck out line. And I do. And sometimes it just keeps going, but most times it does not.
Hmm.
Let's look at Trent's favorite, Tesla.
I haven't made a trade in over a month.
I just like it because at the three
He's
o'clock
staying
meeting,
away right now.
you used to
He's
get a lot of
staying
crap
away.
with Tesla.
Yeah.
So again, Tesla went down below the 200. It was skirting it for a while, and I know Margaret said she made some money. She's not on today, but she said she made some money on Tesla as it's above the 200. But you can see how close, you know, the diverging 20 and the 200 are. And at some point, it's got to pop out, and it did. It came to the bottom. So now it's just using the 9 now as a level of resistance.
I have
Let's take a
Tesla and I'm
look at.
sad about it.
I think Tesla's going to do something with I hear that they're making they've got a new robot now.
Oh, really?
Yeah, that's so I think he's getting into the competition with the robotics division that they're going to supply robots the same as other manufacturers do for warehousing and things like that. So if he picks up on that, that could throw a good spike into it. So it might be one to actually watch down the road.
Yep.
He's been doing that. He's been working on that for a while now. That's something that he's been hush hush. But I don't know how that comes into the mix is the question with Tesla. You know, he's all over the board. That's one of the problems. Like, it's hard to focus on a stock that you can't get a clear picture, right?
Right.
Tesla, it's robotics, you know, I want to be on the moon, on Mars. I want to, and I want free speech for X, you know? I mean, how about some direction? Because, I mean, that's my problem with him. It's like totally lack direction.
Well, he actually, in a way, gave you direction in his earnings call, saying,
I listened to that.
I can't keep up with the cost of financing a car, so I'm in trouble.
Right.
I think that gives you an overall direction of where in the short term it is.
Agreed. I heard that. But
Maddie, shut
up. One more time.
I'm gonna put her on mute.
Let's I see we got a note. I forgot NVIDIA, so let's look at that.
Who knows what he'll do? Who knows where it'll come from? But I think
Did you see Trent? I mean, your father's CRISPR finally exploded. You saw that?
I did not.
Yeah, I've
Uh,
been watching that. It took a big jump there.
Yeah.
yeah.
Yeah, they came out with some was it a deal with somebody or I think they made a deal with somebody, right?
I think so.
Yeah. But that is up big, big, like $12 overall. More. I would say about $13 up.
That's a positive market, unknown market condition.
Yeah.
Here's a here's NVIDIA. You can see we got in right at this point here, and then it went up. And when it touched the Bollinger Band yesterday, that's where I had pretty much where I would have gotten out. And you can see it's still up a little, and you got some sell orders just above it right now where the Bollinger Band's touching. So again, it was 27 bucks up. I'll take that. Still strong on the MACD. This is flat because it just hit the roof, and the same thing on the RSI. So, I mean, I look at the intermediate resistance level, and that'll probably change now with the data on Monday, and we'll see where the sells are. But this could move up and give us another intermediate resistance level above, and it could keep rolling. Or, it could decide that, okay, I'm done and come back down. But I took profit out of it because I wanted it. I wanted the profit, and it hit my lines, and it made the decision for me. So, anyone else have comments on NVIDIA? There are some gaps you can see.
I took my NVIDIA. I mean, I hit that a while ago, but I haven't reinvested in it. However, I left in my winnings. I took my principal out of it,
You're playing
and I
house
left in
money.
my winnings, and I'm still gaining. So, I'm just kind of letting it ride.
That's good because you're on house money. Make
Right.
sure you make sure you put in a stop underneath so you don't lose it.
I think we're okay. I think about that, but I've also watched this stock take, a big drop in a day and then
Yeah.
come back the next day. They get all those stops out.
Yeah.
I
Just
don't want to be cashed out yet. I think that we have a longer run to go with this.
be cognizant of some of the gaps that we have down there.
Yeah. No, I watch your theory on the gaps.
Yep.
I back up to see where they are.
This is one that I think Kerry was buying this week and other people, and it's AEHR test systems. And you can see this again was riding right along. This is the intermediate support level, which is equally as reliable as the intermediate resistance level for me. And so you can see that it's been a long downhill road, and we're under the 200, we're under the 50, we're under the 20, and we just got to the point where the 9 caught up with it, and it's a little bit above. So I'll be watching this one. If we can get it doesn't look like it's going to happen today, but a full candle above this will probably go on the under the 200 list next week. We're seeing a little bit on the MACD come above, positive. The stochastic is crossed over very slightly, and then we got a little bump on the RSI. But we're going to need a lot more momentum because there's no momentum in this stock. But we are seeing a little price action, a bump. So I'll watch it. I wouldn't buy it here, but others will. But it's right along this line. The Bollingers are starting to flatten and cruise back together. You can see they're cruising together because we're in a sideways pattern. The other one I think people were talking about a little bit was Snowflake. And Snowflake,
I have some of that.
Snowflake came up and hit the intermediate resistance level. Boom. And you can see for 4 days we've been there. It's above the 200 today. Not really, you got the resistance level and the 200 sitting right close to each other, followed by the 50. You can see they come down and they bounce off the 50. And they go right back up to resistance. So even though we're seeing, that means we're in a sideways trading pattern where,
Right.
we're going between, we're going between support and resistance, and you can trade that too. You buy here, you get out here, you buy, you can get down here and hopefully get out there. If you want to do that kind of trading, it's done it before. So
I think
anyway,
that's because of the market conditions though. because those are all
Yeah.
good days. Those are all, happy days for the tech sector. And it's,
Yeah.
if the market conditions aren't good, then snow is going to drop, as well as Microsoft, Apple, and all the big guys are they're going to fall with, the NASDAQ.
I put this out
Mm.
earlier or yesterday, maybe on snow, and this is the longer term view. And this is the whole theory of lower highs and lower lows. And you can see we going back, to July or whatever, we hit a high, we came down and got a low, came back up, lower high, came back down, lower low, came back up, lower high, lower low, and now we're coming up. We'll see what happens, but in order for this to turn around, we're going to need to see a lower low and a higher high. And then that in probability, we're probably seeing a trend reversal, because the trend right now on Snowflake is still down.
You mean a
can get
higher
that-
low?
A higher low, yeah, and a higher high. Sorry,
This
I
is
was
one
doing
of
all the
those-
low lows.
Yeah.
But
This
if
is
this,
one of
if this doesn't get there and comes down below and we get a lower low, then it's going to continue down in theory.
This is one of those stocks everybody was pumping and saying how great of a company it is, and it's just, gonna be another Nvidia, it's gonna blow out the waters. And it's been a nothing burger.
I wouldn't say it's a nothing burger. If you look at when it first became public, I think 2 years ago.
Let me put that on the chart here.
The,
Well, 2 years ago, everything was pretty high, right?
Yeah. 2 years ago.
Is this the one
2
that's
years
the
ago,
data
you didn't
center?
have to have any skill.
Is this the one that is the data center
a guy from
processing?
manager from CRM, Salesforce, had went out and started this company.
Okay.
Was friends with Mark Benioff and
Thank you.
went
Kerry
through
and I
this.
were,
Here's
I
your
think it was,
2-year chart.
yeah.
I think when Robert's talking about nothing, but he's talking about it. It came out,
Exactly.
it popped up, and then if you look,
Yeah,
from-
it's been a nothing burger.
I mean, if you were an investor and you got in up here, you're down. If you got in here, you're down. If you got in here, you're down. I think that's what you're trying to say.
Yeah,
But from my point of view, being I'm not investing in snow, I see a lot of opportunities for ups and downs and ups and downs and ups. So that's why we do swing trades.
yeah, I agree with you. I mean, it's kind of, it's just, I just don't, I don't know, I'm not focused on it. I was watching it for a while, and I didn't see good entry points that met my requirements to enter. But I'm looking for something a little bit more. It's got to have some more meat in it.
Like
Yeah, I agree with
Bitcoin.
you after seeing this.
What's
After
that?
seeing this, I agree.
Like
I agree with you
Bitcoin.
after seeing this.
I have Bitcoin.
Yeah, I would back. You got to back out a little bit. I understand,
Yeah.
but there's a lot of people that lost a lot of money on snow,
Yeah, a lot of people lost.
and they're
Real
probably
lot.
still. If you've held on to it, you're probably still underwater, because you're down here at this line, this green line right here, and look at all the data points above that green line.
Yeah.
So, and I don't know how long people have held it or got in or got out, but it's why it's hard for me to do long term on stocks without trying to get out, and using some of the skills that we worked on, in swing trading and in investing. I do the same thing in investing in long terms. I'll watch longer term charts and get in and out. Let's talk Bitcoin, because someone said Bitcoin.
That's a teaching moment, though, Mark. To your point, I didn't apply though. I'm a buy and hold unless it's really
Yeah.
starting to. So all the education that I've learned in the last month, I've been implementing the technical strategy, and it certainly helped
Yep.
me set limits on my core positions.
Right.
And
Yeah.
that's a big benefit, because it takes more of the gut emotional feel out of it and puts it down on a graph, which as engineers, we tend to lean towards more. So
Yeah.
I'm doing well on long-term positions like Microsoft, Apple, all those magnificent sevens, but like Tesla, I'm like, I got to get out of it because It's just like you showed, it's below the 200.
Yeah.
So
Yeah.
Paul, where do you draw the line?
Like Tesla,
What percentage below?
I don't usually go by percentage. I go by what I know about the company. So like Microsoft, I'm like all in because they're coming out with the 360. Every company that I know uses their suite. People that I know in the corporate industry, they all use it, all those suites. So
Yeah,
everybody's
we
going to
all
be
use
return.
it. It's the
Yes.
best, the best product out there.
And
So
I think that's
yeah.
the difference between the fundamentals and the technicals. You know, Paul, you're talking about fundamentals, and you know this is a great
Yeah.
idea and it's going to
But
work. But
I'm
let's,
not-
you know, like on snow, if you would have got in right here, you'd still be underwater, okay? And this is lost opportunity cost of your money. You could have put this in a treasury bill and waited for it to come back. You know, that's the way I look at it
So
personally.
what I was driving at before, you know, when do you get out? I have a rule of 10%. If I drop below my investment by 10%, which is at the furthest point, right? Sometimes 5%, I'm out. But my rule is 10%. Once it starts dipping further than that 10%, I dump it no matter what. I just because I can make that 10% up somewhere else quicker.
You're tighter than I am, Robert. I'll do 3 to 5, maybe 5 would be my absolute worst nightmare.
Yeah.
So even 3, I cringe at 3. I'm because I don't like losing money, but you know my upside. You know I don't care. I'm in it like I said for bunts and singles and doubles.
Hmm.
Yeah, I play with 10%. It works for me.
Yep, and that's perfect.
And it gives me a I've seen turnarounds in that 10% window. Because
Yep,
a lot of people set stops there, you know?
yep.
Have you
Yeah.
ever cost averaged down? Like if you're down 10% and then you know it's a good company, you'll buy a little more.
I've done it.
Yeah,
I've done
I
it.
do that sometimes.
But I'm not a holder anymore. I've changed the way that I invest. I mean, I'm
Yeah.
hearing you. I mean, I think what you're doing is fine. The Microsofts, you know, the Apples and all those companies, I agree with you. Yes, I have permanent positions in certain companies. But the ones that I'm playing on a daily basis, I I I run by my rules. And if I run by those rules, my portfolio keeps gaining. So
And that's the key.
that's the key, right?
Follow your trading plan. Yeah.
The overall.
Your trading plan is not my trading plan, is not Trent's or
Right,
Paul's. And
right.
it's what works for you. But the cool thing is we all have a plan based on some kind of technicals with some fundamentals and some macro that we go over, you know, and try to get a better idea of what's going to give us the highest probability of success, you know,
Yeah.
and how we get there. You know, we're each like coaches of our own team, and we have different strategies on how we move the ball down the field, or you know how we move runners around the base. But if they work for you and your risk tolerance, that's awesome.
Right, but also, like I have a friend, he likes to invest, he's trying to build his portfolio, but he doesn't have a lot of money. So he can't take a lot of risk, you know, but he wants to take a lot of risk to get big gain. But usually that usually works against you.
It can,
So a person like me who can invest a larger chunk of money and make a lot of money because of the amount that I can invest in it, he can't do that. And he can get trampled on very easily.
Yeah.
So it really comes down to, you know, what I feel comfortable at. He wants to feel comfortable at that, but typically he'll get trampled because he can't hang on, you know.
Yeah.
The market, you know, market's up, it's down, it's all over the place. But anyway,
well,
it's
does he trade by the seat of his pants, or does he have some kind of system that he's
yeah,
trying to
he's
do?
the seat of the pants, you know.
That's
And I have to
never a
admit,
winning
I used to
strategy.
do the same thing. And you probably did the same thing at one time in your
Absolutely.
investing, right? That's how
Yep.
you learn, right? How do you learn? By taking
Yep.
the pain.
Right.
I was lucky enough to be, in the industry and the operations side. So I got kind of to look at what happens behind the scenes too, so that opened my eyes a lot too.
Hmm. Yeah, I know. I'm sure behind the scenes is very interesting.
Yeah.
Yeah,
The
having worked
amount of,
for a large company as well, you start learning. I work for Sargent Assa Abloy at a
Mhm.
big factory, and you get to learn like a little bit about what makes a product. And like I wanted to mention to Kerry, I may not be here for this afternoon's meeting, but you can't just go by CapEx or money invested in R&D, because a lot of companies will put a lot of money in product improvement, or they'll put it in a different bucket, like processes improvement or manufacturing improvement. Every company has their own dance on how they're going to allocate their money. So you can't just say, well, geez, I'm putting all this money in R&D and Amazon's awesome, because Elon might be putting a ton of money in manufacturing development, which is an entirely different bucket, but will have product improvement and lower the cost of the widget. So anyways, I don't know how I got onto that, but
But even
but
lowering the production of the product, that's where you put a lot of money. I mean, I'm doing it. So because you want to lower your labor costs, and by lowering your labor costs, it allows you to produce that product cheaper and make more profits.
oh yeah,
That's usually where your money's lost.
oh yeah, material cost, overhead,
It's fixed.
labor,
Material is
and
fixed
indirect.
in my mind.
Pardon?
Materials, as we would say, material is material, right? But labor cost and overhead is your variable.
Yeah.
And processes, right? Because you could
Yeah, yeah,
you could go to a different processes and save a lot of money that way.
absolutely, absolutely.
So
Agreed.
you
Yep.
can't just look at it from R&D.
Mhm.
so we're getting close to time out here, but
Yeah.
just a little cleanup here. In a couple weeks, like next week is the 17th, which is fine, but the following week's the 24th, which is the day after Thanksgiving. So I don't think we'll have a meeting that day, because a lot of people are busy and the markets are nothing going on. We can switch it up earlier if you guys want, or just not have it, which is either one's fine with me. And then on December 15th, I'm going to actually be down in South Florida, so probably won't have a meeting that day either.
Okay.
So
Find your place down here, Mark?
no, it's Jan's daughter's 50th birthday, so we're gonna head down to Miami and South Beach, which I'm not thrilled about, but that's where we're going.
All right, well,
So
uh,
anyway, those are a little housekeeping. So what do you guys think about, not doing it on the 24th, the day after Thanksgiving?
I
I,
probably won't tune in, be very honest with you.
yeah.
Yeah, so
I think
I'm thinking there's not gonna be much happening that week, I don't think, in
Yeah.
anything, but
Markets are
we'll
dead.
still be on the Discord and all that. So
um,
So let's
sounds
plan on
good.
that. Let's plan on not doing it on the 24th, and then again, I'll be out on the 15th, so probably not then. But I'll still report in. I'll take the laptop with me and hopefully not get any sand in it. So
Hopefully you do.
and I don't want it on my laptop.
That's true.
It's got enough silicon in it as it stands.
True.
So
Well, you can leave your winter
anything else,
jacket
Trent?
home.
That you guys got anything else that before the weekend starts here?
I don't. No.
I
I'm just
really enjoy these meetings. I enjoy the way you guys now, everyone is participating and the ideas are
yeah.
awesome. And the content is just amazing. So I really enjoy, these smaller little meetings, but I wish more people could do it. And maybe we have to switch it to a different time to get more people on, but I really
Yeah.
appreciate you guys showing up and I really look forward to this every week.
Me too.
It is.
Yeah.
It's fun.
Me too.
I
Do we have a lot more
try to
platinum
be,
members?
What's that?
Like you say, that there could be maybe a better time. Do we have a lot more platinum members where, geez,
Yeah.
we do? And they just, maybe we put a survey out saying what a better time that can work for everyone.
Yeah,
It's
I don't know,
so
just an idea.
platinum is our fastest growing category right now. And a lot of people are upgrading from premium plus. And it's getting them to be able to participate. And I think maybe, you know, I've I've toyed with the idea maybe we could do it on the weekend, but then that's the weekend, right?
Yeah.
or a
Don't do
Monday
that.
Monday evening kind of thing. So we need to. I think it's something as we go into the first year that Mark and Kerry and I
And you
figure out
guys.
a good time to do it.
I mean, we could go the opposite of the Kerry's 3 o'clock meeting, do it 3 o'clock Monday and start the week that way. Or,
Yeah,
I'm really up, whatever you guys want to do that works for you guys, or keep
I
it the
think
same. It doesn't matter to me.
yeah,
there was a discussion about this, I guess, a couple of months ago. I think Friday overall is a bad day, to be very honest with you,
It is
for
for
the
me.
meetings. Because it's the
yeah,
end of the week, I mean, if you really want, in my opinion, if you really want to educate people, I think it's more discussion is best on Mondays. Because you're moving into the week, right?
yeah,
When you get to the end of the week, yeah, you're talking about the week, but what's really coming forward?
right.
Like everybody that they go on, they take the weekend off or their long weekends or whatever they're doing. I know, I'm just
Yeah.
voicing my opinion.
Is there a time on a Monday that would be best for most? I mean, like I'd love to see a lot more people on this because it is educational
Yeah.
and it is very helpful. And I've thought, is it a 3 o'clock or a 5 o'clock kind of time frame? When can people break away?
So I would just say for myself, anytime afternoon, after lunchtime, because morning's usually very hectic for me.
Yeah.
But in the afternoon, anytime from there, it would work for me.
Okay.
But I'm only one person of your crowd,
Yeah. Okay. Cool. Well,
Anything work for me. I'm retired, so anytime you want to put it, let me know.
okay. 6 a.m. There we go.
Nope. I'm up
No,
though. I'm up by 4:30 to
I know.
I'm with you,
so,
Mark. I'm up
Yeah.
4:35 a.m. every morning.
yeah. I don't
Yeah.
even set an alarm. It's an illness.
Right.
It is. I've
I
got,
tell
I
you though,
know
as I get
it's a
older, the
disease.
recliner about 3 o'clock looks pretty good.
yeah. All right, guys.
All right,
Thank you so
guys, have a
much.
good weekend, and
Yep.
we'll see you next week.
Sounds good.
All right.
Guys, have a
Alright,
good
talk
weekend.
to you
Take
later.
care.
Bye.
Bye-bye.
Bye.